Really happy to be here. It's very nice. When I had this color chosen for our office walls, little did I know that it would turn into a virtual green screen. I'm a forward thinker. I knew that it would be valuable. So I want to thank you all for inviting me. I want to thank the Washington University Center for Social Development, and of course the University of Maryland's Financial Social Work Initiative. I'm big fans, huge fans of both of your work, as I think you know, and also thank you to NIFI for sponsoring this event. I also need to apologize in advance because I'm a little bit exhausted. No, I'm not here to complain about Zoom, but really, when I accepted the lunchtime gig, I just didn't realize that that meant I was literally responsible for making everybody's lunch. So I hope you all got the sandwiches and the chips that I left at your front doors. Let me know in the chat if I messed up your order, and I'll get on it as soon as I'm done with my remarks. So please forgive me. We are living in an undeniable moment in history. Obviously, from a global health perspective, domestic politics, and also financial capability. In my career, this is really the second financial capability watershed moment, I believe, for this field, the first being in 2008. I think that recession taught our field and our partners two things. First, I think it taught everybody that individual and family financial stability was everybody's problem. That as families suffered and failed financially, communities failed. And I think that that lesson was painfully driven home back in 2008 and right afterward. The second lesson that our field learned and underscored in 2008 was that even the best of financial literacy wasn't sufficient to meet the crisis. So in government, I think that gave rise to this new field that I and my colleagues work in, which is the field of municipal financial empowerment. There are dynamic forces in local government that make a really big difference to the ability to succeed. There is local accountability, which is a polite way of saying the local newspapers and other stakeholders. You really have to solve the problem when you're in government. And you have to do so with a high level of quality in delivering those services. So local accountability was a really important dynamic in the birth of this subfield. The second is the mandate for scale. Cities and counties don't get credit for serving lots of people. Their job, their mandate is to serve everybody. And so that also means that they have to design programs and services that are consistent and equitable in their delivery. The third is that local government has multiple touch points. Government is touching the people that we want to help through programming and often with money, which creates real opportunities for literal and meaningful programmatic interventions. And then the fourth is the bully pulpit. Mayors can easily get the attention of the press, and they also can bring a trusted voice in a field that is also unfortunately beset by fraud. So that for us gave rise to the creation, back when I was in New York City government, of the Office of Financial Empowerment. We then created and partnered with cities around the country to create a coalition of cities that were not just talking about this work, but actually doing this work. And then when we left at the end of the Bloomberg administration, we started the organization I currently run, the Cities for Financial Empowerment Fund, which not only helps support the cities that are already working on this effort, but spreading it to others that wanted to get started. We're now working in our most recent number was 101 cities and counties across the country. So I think that the birth of that moment is that movement was part of the watershed learning, the painful watershed learning of 2008. This field is known for several programs, financial empowerment centers, something that we run, creating one-on-one counseling as a free public service. Many of you are partners with us in that work. Child savings accounts, local consumer protection offices, bank-on coalitions, an emerging number of guaranteed income programs. And what I'd like to do real quickly, if we could, just to test out this function, is do basically a one-word request in the chat, if you would. Just a quick survey. So how many of you work in cities or counties that have had some kind of a government-based financial empowerment program? If it's you, just put the name of your city or county, if you would. And Chris can adjust her glasses and let us know if some of you have seen that in your own hometowns.
Yeah, I'm seeing here New Haven, Boston, New York City, Portland, Oregon, Baltimore-ish, Baltimore and Baltimore-ish, Pittsburgh, PA, St. Louis,
Wow,
several responses from St. Louis, San Francisco. Any others?
That's good to hear, and I'm familiar with the work in all those cities, and it's impressive. You know,
Hawaii.
Oh,
sorry,
yeah.
Fremont coming in. Oklahoma Native Territory.
Yeah. Right.
Yeah. Yes.
Yeah.
Chicago. Yes. Thank you.
All good stuff, and really all really having been born, I think, of the watershed moment of this field back in 2008. It's no wonder that there was so much growth in these efforts. Americans' finances are in trouble, and they have been in trouble for a while. Even before the COVID-19 pandemic, individual and family financial instability really had grown, I was saying, to become more the American norm. 1 in 5 households had 0 or negative net worth. 25% of families had no retirement savings. 25% were so much in debt that they had at least one debt in collections. Almost 40% of Americans reported not being able to save or to be able to get a hold of $400 if there was an emergency. 25% of the country outside of the banking mainstream, that's tens of millions of people. Now those numbers almost sound quaint. The pandemic has brought these financial challenges into focus, and as if that wasn't enough, have really compounded it with new issues. So for context, 48% of Americans surveyed said that they would be without income if they were unable to work because of illness. 48%. 73% of Americans report a decrease in their family income already. Literally tens of millions of people have been laid off, are experiencing reduced hours, or have had to leave work in order to care for somebody who's ill. And when you compare this information to how bad things were in 2008, it is 3 times the number of job losses and 4 times as many people who have turned to government unemployment insurance. I'm just going to try and cheer everybody up here today. That's my job. And on the unemployment insurance, my goodness, I was just seeing there was a Brookings survey. It says about half the people that applied for unemployment weren't able to get it easily, or still haven't gotten it, or were having trouble dealing with the application process. So again, real compounded issues. And the one that I think keeps many of us up at night, 28 million households in danger of eviction. It's heartbreaking. On top of that comes the inequality. The CDC tells us that people of color are more than twice as likely to get sick and are also twice as likely to be furloughed or laid off because of what's happening in the economy. Let me tell you what we're seeing through our partners and our programs as it matches some of this national information. And I want to talk about the work over 3 areas this afternoon. One is in the financial counseling arena. one is in banking, and the third is politics. So financial counseling, those sobering statistics that I just mentioned are reflected in our data as well. At the financial empowerment centers, we're in about 30 cities and counties, depending on how you count, at the moment with that program across the country. We are seeing an increase in demand for those public counseling services by 40%. I want to do another quick chat survey if I could. If you all have a ballpark in your work, I'm going to keep Chris on her toes for these remarks. If you don't mind, Chris, if you all have a sense in your own arena of increased demand for public services or for services that are increased because of COVID, if you have a ballpark number, could you throw that in the chat for us? And while you're doing that, I should say that not only are we seeing a 40% increase in the demand for the public counseling that I mentioned before, but I don't know if you all are seeing this as well, there is a marked decrease, a plummeting in no-show rates. People are at home. And so that is another factor in terms of increased demand for these new services.
Okay, let's see here.
Chris, anyone throwing some numbers at us?
Let's see, not quite yet. Let me type the question into the chat.
It's still early to get data.
Okay. Oh no, here we go. Here we go. No, but people need financial and computer literacy to take advantage of virtual services.
Yes, that's a really good point. In fact, that's exactly what I was going to say next. Somebody's reading my notes. Not only is financial counseling an awkward, intimate experience, but now people are having to navigate remote services and more extreme financial circumstances and the anxiety of COVID in order to do so. So seeing that increase in demand is even more startling when you think about what it takes for people to step forward and pursue that help. In addition, this counseling has a range of new services, new pressures that we're seeing from our clients. Aside from the technicalities of remote counseling and remote permission to be pulling credit scores and dealing with certainly in the early months, the difficulties for some of internet access and Zoom. So for the first time, there are millions of people who never before in their life had to apply for unemployment, are now newly navigating and have been newly navigating that service. People were, for the first time, having to access federal stimulus dollars, and that created its own issues, which we'll talk about when we talk about banking in a few minutes. And of course, people, and I saw this in New York with Hurricane Sandy, people are suffering from the scams that come with a crisis, a public crisis like COVID. We added some new data that we were collecting from clients once we started shifting into the COVID services early April. We saw across a couple dozen cities, the data that I've got here, we saw that 83% of our clients reported a decrease in income. And 41% told the counselor that they had expenses coming up that they could not pay. It's really incredible. However, clients are making demonstrable progress. They are seeking help and they are making progress. It's early in the crisis still, but so far our data is showing that 58% of the clients that have come to these services across the cities I mentioned, 58% of them have already achieved at least one demonstrable milestone in their progress, debt reduction, et cetera. We also at the CFE Fund launched a brand new program. It's that metaphor about building a plane while you're flying it. We had, as I say, many cities that had financial empowerment centers, the one-on-one counseling, but we had a lot of other city and county partners that weren't there yet, that were mid-production of that program. It takes a while, or that didn't yet have that program anywhere in their tool belt yet. And so we launched a financial navigators program. The service is more light touch. than the one-on-one counseling. Residents get immediate referrals to the range of local, county, state, and federal benefits and programs that might relate. You think of it somewhere on the spectrum between a call to a 311 operator where you know what you're asking for, and at the other end of the spectrum, a counselor who's really going to work with you for a while. These are about 25, 30-minute calls generally, and getting targeted follow-ups for people on where they can get help through that kind of triaging. We just started this a couple months ago. Folks like Hawaii were the first, by the way. Hawaii was the first to launch their Navigator program. So these are really just getting up and running for clients. The most frequent issue that we are seeing so far, 25% of them are housing and utility assistance requests. And the second largest ask, even though this is supposed to be about finances, is for help with mental health issues. I'm sure that's no surprise to you all. And it's, I think, particularly notable given that that's not really how this service is being even marketed. The second area I wanted to talk a little bit about what we're seeing and what we're able to do, and I think what it means, is around banking. The CARES Act, as you all know or will remember, included emergency stimulus payments for individuals and families. So those who were eligible for payment could either receive it fairly quickly through direct deposit, or they would need to wait for a check, sometimes for weeks, sometimes for months. Then they would need to figure out what to do with that check, how to get the money, then how to use the money, and all of this in a socially distant world. So banking became not only a national topic and a national concern, but banking also suddenly became a health issue. And that obviously was a new and remarkable development. 92 million people, estimated by the IRS, who had filed taxes, but who had not given the government direct deposit information, an account number. So 92 million people were automatically in the category of you're going to have to wait for a check. And another 12 million or so is the estimate that I keep hearing, weren't in the system at all, and just had, for one reason or another, not needed to or had not filed taxes at all. And so another 12 million are said to have been eligible, but weren't even known to the federal government. So as I mentioned, if you don't have an account, in the system, it's really a significant problem in COVID. This is what the CFE Fund and our partners were able to do in that regard. We run a national program, which is an umbrella for about 90 to 100 local coalitions called Bank On. One component of Bank On that's really central and that played a role in this federal crisis, national crisis, was we have national account standards. The Bank On movement has grown to specifically articulate what a safe and appropriate account is, what an affordable account is, how it can be, what functions need to be included in that account, what protections need to be included in that account. Generally speaking, these are $5 or less, and there's no overdraft and no insufficient fund fees. That's the thumbnail of the standard. So we have that standard, and we literally certify accounts that meet that standard across the country. So what were we able to do with this national account standard? First, we worked with our certified financial institution partners, and we went to them, and those who had certified accounts, we asked, how many of you can open up one of these accounts online for a completely new customer to your bank? The good news was that there were, at the time, 11 of them, including the biggest in the country. And so the second thing we did is we then worked with the federal government. The IRS agreed to open up a new portal on their stimulus web page, where they would allow people to give them account information if that account information didn't already exist. And as I said, that looked like over 100 million people. So the IRS agreed to open up this portal to be able to accept that account information. The second thing is that we worked with the FDIC, who's always been an incredible partner on the Bank On and Safe Banking movement. And the FDIC took the lead for the federal government. They went to all of the key federal agencies and said, all of you should send people to us on the question of how to get a bank account. And what the FDIC then did was specifically say, go get a Bank On certified account. The IRS started pointing people there. The CDC started pointing people there. And there was a concerted and clear message. You need an account. If you can give us your account, we can get you the money quickly and, more importantly, safely and productively. And these are accounts that you can trust. So much so that the federal government was willing to literally point people to them. The third thing that we did as part of Bank On is that we tapped into our incredible array of partners across the country. As I said, there are over 90 coalitions, mostly at the local level, but sometimes at counties and state levels as well. And they really leveraged the local messaging. They leveraged this opportunity of the clarity of a certified safe account, the critical public discourse need for that account to get to the IRS quickly so that you could get the money and not have to wait, in some cases, until August, many, many months after other people got them through direct deposit. These coalitions helped leverage the voice of their mayors in many cases. Many mayors went public saying, you need to go get this money and here's an account if you don't have one so that you can get it safely and quickly. And we saw a lot of progress. I mean, the CFE fund, which doesn't usually message directly to consumers. We work usually with our city and coalition partners. We created this web page for people to be able to come and see which accounts they could open online and see what other accounts were certified. We saw an 800% increase in our new website that we built on the fly. People spent an average about 15 minutes on the site, which I think is amazing. And about half of them clicked through to at least one of the certified partners who were able to open up accounts online for them. So I think the message and the opportunity and the need really resonated at a pretty, at least from our perspective, a pretty large scale way. The IRS reported, the last number I heard, and it was relatively early, so I know the number is bigger. The IRS reported that over 12 million people took advantage of their portal and entered in new account information. That 12 million is definitely not because of all of our concerted efforts on Bank On, but we think it helped. And that was a big deal and something that the IRS really valued. Internally, they referred to the Bank On certification as the Good Housekeeping Seal of Approval that they indicated was the difference between essentially financial literacy, which is it'd be great if you had an account, good luck, go get one, and here's what to do when you get one, to being really quite specific about it. The third topic I want to cover in our time remaining is I want to talk a little bit about politics. So I want to do one last quick survey if I could. And I want to ask how many of you, and again, if it's you, put your city or county name, or if you would, how many of you heard your local elected leader or leaders talking about family financial stability issues? If you heard that from your local leaders, if you heard them talking about it, if you could enter your names in there, we'll give Chris a run for her money.
Mm-hmm.
I'll take it.
Yes. Boston.
It's
yes.
not vodka, it's water.
Yes. Anybody else? Did you, yes, to Houston? Did you hear from your local leaders on family financial stability?
Okay.
Yeah,
Well, no problem.
Oh, here we go.
Okay.
I heard the opposite here in Harford County, Maryland, from Jody Fry.
Jody. Huh. That's interesting. Wow. Well, I'm a glass half full guy. I saw a lot of good stuff, but obviously there's a lot more work to be done. I think that what we tended to see across at least our partners um, was that a lot of the financial empowerment programming, particularly the counseling and the navigating that I was talking about, um, didn't just get sort of a standard announcement. It tended to be included in local leaders' frontline emergency services. Obviously, health came first, but in many of our partners, including often in daily or weekly briefings that local leaders were giving, pointing people to where they could get help or referrals that they needed in regard to their finances became a frontline issue, which we suspected. It's certainly the way things worked in New York around Hurricane Sandy. Um, we've seen just at the CFE fund alone, we've seen over 55 cities either newly create or expand those services. Sorry, I should say cities and counties newly expand or create these services to add to their program array over the course of this crisis. Um, and, I think in general, the field, um, it's come a long way on the pecking order of public priorities. This would certainly not have been true before 2008. And the idea that this is what local leaders so often turn to when talking about emergency response, I think is a real hallmark, not just of the field generally, but of the quality of the services that local leaders are willing to put their names on and highlight. And I think that is deservedly so. Um, I began my comments earlier, complaining a little bit about having to make lunch, but I also talked about two watershed moments, I think, in this field and what they taught us. I said that in 2008, I think what we in the field learned and helped underscore and our stakeholder partners saw was that these issues are public issues. They are not private issues. They are of public import. And second, that they required programming, not lip service or general literacy. So what do I think this stage, the watershed of 2020 is teaching us? I think two things. The first thing that I feel is that people in need uh, for financial help will meet you halfway, even in a crisis. Um, people are sick, people are dying, people are afraid um, of being sick or dying. They have loved ones in that circumstance. They're worried that tomorrow's trip to the grocery store is a slow motion Russian roulette. Um, but this didn't eclipse people's need to deal with financial pressures. Those issues weren't left to the side, they weren't put on the back burner, and people were willing to take difficult steps to meet those needs and to get the help that this field offers. They were navigating new systems to be able to do this. They were seeking out the help. They were showing up for counseling and navigation services. They were opening new banks and credit union accounts. They were navigating an IRS website, for goodness sake, to enter that in to get their stimulus payments. 2020, I think, this crisis, this moment has made clear that even in those circumstances, if there's meaningful financial empowerment help to be had, people will go get and use that help. The second lesson I think that we are learning in this field from this crisis is that this help has to be systemic. Financial empowerment programming needs to be more than great programs. It needs to be baked into infrastructure. Cities and counties that already had offices of financial empowerment or financial empowerment center programs or bank-on coalitions, they were able to build on top of these services quickly. They were able to go public almost immediately. And they were able to expand those services and pivot them remotely much more quickly because it was already part of their infrastructure. Mayors didn't have to pay lip service to, or as Jody said, maybe ignore these issues. They had the opportunity to step forward and lean in on these programs. God help me for using that expression. And people were able to see success. Programs that made payments already through direct deposit, they were able to immediately pivot to social distance banking and build on top of that, providing on-ramps where they weren't yet in place because they already had the infrastructure and the know-how and the ethos to be making payments directly rather than through checks. The IRS stimulus program, was able to pivot as well. I think that that capability of building on the infrastructure really tells us something powerful about the need for that infrastructure to be in that tool belt. And we can't let this lesson fade. Cities and states and the federal government, they have to build real and safe banking into their payment streams, into all of their payment streams. And their programmatic tool belts, they really have to include meaningful one-on-one services that help people navigate and address their financial issues. Those tools have to exist and they have to be ready to meet moments such as these. Basically, what I'm saying is that financial empowerment is essential to disaster preparedness. So I'm going to stop here, and Chris is going to throw out any questions or comments that you all have. I think we've got a little bit of time left.
Absolutely. Yeah, we've got just a little bit over 10 minutes. And I've been monitoring the chat as well. Kimberly is saying we are still in the present tense in terms of this watershed. Here's a question, shout out from Lissa about infrastructure, yes. And here's a question, should social workers anticipate municipalities cutting back on these kinds of local services and programs due to possible decreased tax revenues this and next year?
Okay, that's an excellent question. Thank you for that.
Thank you, Matthew.
Yeah, thank you, Matthew. We're on it. We're worried about this too. Having been in government, we are very aware of what happens with furloughs and decreased tax revenues and all of that. I think I went through about 10 budget cuts over the course of my time in government. And it's why we have been so focused on what I talked about before about positioning these programs as frontline services. When this crisis hit and we were talking to, for example, our Bank on Coalition partners, a lot of them were basically saying, this is a crisis, we want to stay out of people's way. And people don't have time to talk to us. And our strategy was really, it's the opposite. As I detailed in my remarks, people need safe banking now. They need it more than ever. It's now a health issue. And everybody's talking about the stimulus payments. This is the moment to move forward. And so I think that between that and the counseling and the navigation and some of the other things that you're seeing, I think that we have done a pretty good job, we're certainly not finished, a pretty good job of clarifying for elected leaders as often as possible, these are frontline emergency services. This is part of your pandemic response and not the most expensive part. And so I am optimistic that this field will and is making the case for itself as not on the early block of services to suffer.
Okay. All right, great, thank you. We have a number of questions coming in. This is from Annie. What about the growing range of non-bank financial products? How do we make sure that everyone has access to a free or low-cost affordable bank account when people are increasingly using non-bank services?
Yeah, non-bank services are a range. I could talk about that for a while, but I'll be brief. We believe strongly that the issue with banking access is not just literally how do you get money and spend it. It's about entering the financial mainstream. It's about being connected to a real financial institution from whom you can get help, from whom you can rely upon for the access to your funds, customer service, entities that are regulated carefully by the government, and that offer you the opportunity to grow from your on-ramp into the system to other products and loan opportunities. So I think that the fintech world can be sort of exciting in many ways and feels a little bit like the pathway to scale because it's all online. But too much of that is either building upon an underlying bank account in the first place, or is really just about spending cards. And that's not what's going to lead to people's stability.
Okay. All right, thank you. This question from Julie, what has been the reaction to the banks that offered their accounts online and got a lot of new customers via the stimulus program? Do they see them as new customers that may develop long-term relationships, or shorter term as needed for government benefits?
It's such a good question. Thank you. So we have a partnership as part of Bank On. We have a partnership with the Federal Reserve Bank of St. Louis, and they created a voluntary portal. It's a Bank On National Data Hub, into which financial institutions, banks and credit unions that have certified accounts voluntarily submit a bunch of information about how that account and those clients are doing. We have learned already that 75% of the people that open up these accounts are new to that financial institution, which means they are not having people leave one account and going to another for the most part. They are bringing in new customers. The retention rate of those clients and the usage of those accounts is robust and on par with their other accounts. This is a sustainable set of products, and it's why you've seen a lot of banks and credit unions not just newly offer this product, but double down on these products and start really selling them. Last year alone, in just the top 10 financial institutions with certified accounts, 800,000 accounts were opened across this country. These are great accounts, they're safe, and they meet people's needs, including the financial institutions.
This is from Margaret. Your recommendations for social work researchers and educators.
Oh God, Margaret, it's like a blank check. Well, that's a great question. I'm always interested in the longer term benefits of people who make progress. Whether or not the financial empowerment world is doing an increasingly terrific job of helping people move forward, and that sustains. So that's really my question, is my big question in research, which is, do people who make progress end up longer term farther ahead? Or is it more about, terrific, we met a crisis, we made some progress, and next chapter? If I think of more, Margaret, I have your number, I'll call.
Okay. This is from Zaibi. For city, county that doesn't talk about financial security, where can researchers do? What and where can researchers do to start a conversation?
So that's a great question. Data talks, and the ability to get into public discourse the specific kinds of numbers, some of the examples that I gave before, telling elected officials how the people in their communities are faring on issues like housing, debt, job security, income loss, etc. Those numbers move elected officials. So getting those numbers out front, and then maybe amplifying those numbers, I think is a really great strategy, particularly from the research field. I think it's critical.
Okay, great, thank you. I'm going to combine these last two. Have coalitions found a way to create financial inclusion pathways for those without internet access and undocumented immigrants? And then also, we have another question. Will you please speak on the relationship between financial inclusion and anti-racism work? Or are we seeking to include people in an inherently racist system? So
a couple quick, easy questions right at the end there, Chris. let me try to tackle the last part first. It's very much on people's minds. I think that the inequity part of this equation and the energy of this moment and this movement and the cries uh, for justice, I think are going to prove helpful for this field. I have seen both in front of the cameras and behind the cameras the genuine sense of pressure to meet the moment that large players are feeling. And I think that when you look at some of the statistics, just in finance alone, on how much more these problems are being felt by communities of color, um, it adds energy to the mandate to do something about it. In other words, multiple forces, I think, are working together to demand change. It would be a whole other speech to talk about what that change looks like, but I would just say this about the mainstream. Um, we have seen in our research that if people don't have a bank account, even working repeatedly with a professional financial counselor, repeatedly, exactly on trying to do something like build savings or improve your credit scores, for example, not having a bank account, accounting for everything else, accounting for income, not having a bank account made it half as likely that they were able to save money, and a third as likely that they were able to improve their credit score. But if they got a bank account or a credit union account in the course of their counseling, their chances of success multiplied eightfold. And so I think that what we see is that the fundamentals of how the infrastructure works, I wouldn't think of it as the system. I think about mainstream banking as the infrastructure of finance. And I think that the worst thing we could do is to create a system outside of the mainstream for those of color. And I think that, and which of course is not what you're suggesting, but I think about the early days of second chance accounts, accounts that were lousy and that couldn't really do the things that people needed to do. It was really almost creating a separate but equal version of mainstream banking, and I think that that's terrible. So I am very much about like, let's improve the system, but in the meantime, let's pressure the system to do a much better job of reaching out and serving people in need.